let's get our first speaker to share with us. So I'm very, very excited for this man, Neelan Narasimulu. He is the CEO of Sanlam Multi-Data. He's going to speak on the topic revolutionizing money movements, trends, solutions, and disruptions in African Fintech landscape. Now, Neelan told me that he could talk days on the revolutionizing money movements. We've given him 20 minutes, and I'm keeping him to those 20 minutes. So he said, okay, he's going to shake us up a bit. Just a little bit of background. This man has 28 years experience, over 28 years experience in the intersection of tech, finance, and innovation. And he is on a mission to drive transformative change in the financial landscape. Without further ado, and now welcome to the stage. Please give a warm welcome to Neelan. Thank you very much.
Thank you, Ashila. I've got to keep myself honest and keep me on the clock, right? Morning, everyone. A mouthful of a topic. I'm Neelan Narasimulu. I am very passionate about payments, and I'm very passionate about changing the world. Sounds very cliche, but you'll understand that as we go along. I'm fortunate in that I've worked across many industries, finance, rewards, credit, and that's shaped my thought process, and it's shaped my approach, especially when we think about payments. Now, I'm what you call a tech CEO. That's effectively, I'm a techie. I've done lots of tech stuff. Data is my specialization, and they put me into this unfortunate job to run a payments business. So as the CEO of Multi-Data, just to give you some very quick context so that you understand where I am coming from today, we have a 54-year-old payments business, but I quantify it as the 18-month fintech. Fortunately, we've got some big numbers behind us, like 340 billion annual processing. We operate as a TPPP and an SO. We're part of Sanlam Fintech, which is a new cluster in the group. And we're a payments business that's wholly owned by Sanlam. So anybody, most of you all sitting here, only associate Sanlam equals insurance, Sanlam equals investment. I am changing the narrative to say Sanlam equals payments. So a few things, then this is marketing pitch. You'll find us on LinkedIn as Sanlam MultiPay, our platform brand, but we do payments platforms, cool innovation, tap on phone, digital wallets, central bank, digital currency, things like EZAR, which we can talk about later, but that's not the focus of my presentation today. So when I had this topic, revolutionizing money movements, and Ursula's right, I can talk to you for the next 7 hours. If the rest of the speakers would oblige me, you can take the day off. However, I decided to focus and be a little bit slightly controversial. I think it's important for us as an industry body to understand the real challenges that we deal with on this continent. And I am also making a plea to you as fintech leaders. It's time to rise up and take action. And also it's important to understand you may be fintech entrepreneurs and leaders. It's important to understand what is your value to the economy that we operate in. Okay. Clearly some animation's not working. So the three things that I want to focus on today is let's clearly understand the impact of payments, but from a very different perspective. Let's understand the regulatory environment that we operate in and what are some of the nuances that we as Africa face, as well as touch a little bit on this thing we call infrastructure, because we generally make these things seem bigger than they really are, and we tend to make them the focal points that we try to deal with on a daily basis. Okay, see the animation's working now. Okay, so let's move forward swiftly. Very interesting information. Most of us understand immediate payments. Real-time payments goes by many names, but moving money fast. South Africa has got RTC and PayShap. India's got UPI. Brazil has PIX, Nigeria has NIP, Kenya has got M-Pesa. Why did I pick these examples? These are the ones that are actually the ones that are growing the fastest globally. So let's understand this through a lens of what story is immediate payments actually telling us. Focal point number one, all of these emerging economies have a common problem. And we call it a problem because we think an unbanked number is a problem that we face every single day. And we can see that the unbanked in these nations, and I quantify unbanked as bank accounts and mobile money, just for clarity when we talk about Kenya, a quarter of the population is unbanked. Nigeria is a little bit worse. But if we dig a little bit deeper onto this continent, yes, we have massive amount of unbanked in these countries, yet Nigeria, through NIP, can spin out 8 billion immediate payments annually, and Kenya, 26 billion, realizing 45% year-on-year growth and 31% year-on-year growth. That's kind of like bigger than most economies that operate today. That's bigger than insurance. That's bigger than most industries when you look at their annual growth. So it's telling us a story, right? And the story gets even more interesting because the notion of immediate payments, when you tie it to economic growth or GDP, there is evidence that indicates that the rise of immediate payments has contributed to GDP boost. And we can see that in Africa and Kenya, 1 and 2%, 1.5% in India, and India's the super success story with UPI. And think on that for a moment, because you'll understand soon why India is a good proxy when we start to understand this world of immediate payments. So my narrative to you today, 45% of adults in sub-Saharan Africa are unbanked. Stop making that the focal point. Rather focus on the opportunity that sits in front of us to revolutionize the content. Okay, second data point. So we've covered immediate payments. The regulatory landscape. And this is where I get a bit controversial because I know some of my banking colleagues in the audience, they love me and they hate me. So what am I juxtaposing here? Let's look at RTC and PayShop in South Africa, and let's compare it to the poster child UPI in India. That impressive graph, which looks like it only has one line, is the volumes of UPI over the last 7 years. And you contrast that against South Africa with its equivalent of immediate payments, and South Africa is flatlining. That should be a wake-up statement for all of us. So let's understand this a little bit closer through the lenses of regulation and policy making. PayShop is in South Africa, UPI is in India. Both countries have the equivalent of what we call a central bank or a reserve bank. South Africa's got SARB, India's got RBI, the Reserve Bank of India. Both of them did their job, right? What did they do? They did their job because they set out the strategic policy, they set out the strategic objectives, they defined the importance of immediate payments for their country and their economy. Both did their job. However, we look a little bit deeper. UPI, on the other hand, used their national payment system or the national payments body to basically implement UPI, and then banks adopted. South Africa, on the other hand, worked through PASA as a policy-making and guiding authority for payments and the national payment system, leveraged BankServe as the implementation entity, and banks adopted. Sounds very much like the same thing. But what is the stark difference that paints the picture that you see in front of you? The stark difference is that RTC and PayShop today still retails between 3 and 50 Rand a transaction to a consumer. UPI is virtually free. But why is UPI virtually free? Government policy influenced the pricing point of UPI, not, controversially, the banking systems of South Africa. I told you all I was going to be controversial. So important to understand that regulation is a big driver to either inhibiting or driving growth. But what's the harsh reality that we face? The harsh reality, you and I being the fortunate, the consumers that really need the service are the ones that are most impacted on a daily basis. Okay, let's take regulation to another lighter note. So let's understand a few global markets. The US or the United States, 50 states, one currency, pretty much one regulatory framework when it comes to banking and payments. Euro, same principle, one regulatory framework supporting 20 countries. India, great example, one regulatory framework, one currency, one country, 1.4 billion people. Africa, on the other hand, population size, we're pretty much the same. 1.2 billion versus 1.4. But what's the difference on this continent? 55 countries, 48 countries, probably 55 regulatory statements, 55 governing bodies, 55 payment systems. That is Africa. But is that a problem? So how does this manifest? Because these 55 countries actually have the same intent. They have the same regulatory themes. They have the same strategic intents. However, the fragmentation that occurs on this continent creates complexities for simple things like cross-border trade. And what does that contribute to a consumer perspective? Higher cost of transaction, longer time processing. There goes the narrative of immediate payments out the door. Immediately. Right? And then that impacts the adoption and growth of financial inclusion on this continent, and it makes the lives of you as fintechs more difficult and complex because you've got to kind of navigate close to 55 countries if we really want to scale fintech businesses to continental scale. So these are the challenges that regulatory presents. Now let's take a different perspective on infrastructure. Okay. Data points like 51% smartphones on the continent sound like a nice number. All we translate that to half the population don't have smartphones. But connectivity is an issue. Then you turn it around and say, damn, 43% of sub-Saharan Africa don't have access to the internet. Internet has become the equivalent of food to most people, right? Because it's the source of knowledge, it's a source of information, it's a source of business, it's a source of everything that revolves around our lives. Yet, only 43% have access to that. And then that exacerbates even further because the cost of data is another problem statement that we experience on this continent. And then you contrast that to markets like Ghana, where cash is king. Right? But cash is king, and yes, you get informal activity and informal entrepreneurship, but fundamentally the absence of digital payments stifles economic growth. Different data point. Nigeria, leader in immediate payments with NIP, but Nigeria is susceptible to weak infrastructure, downtime, reliability issues. So what's the story that I am telling you today? The story that I am telling you today, and it's important for these data points to land. Unbanked becomes a focal point, yet we have seen radical immediate payment growth in markets that are unbanked. Payments innovation is a contributor to GDP. But we are still susceptible to fragmentation of regulations and policy. Cash continues to be a challenge. Payments growth has happened despite poor infrastructure. Payments growth has happened despite poor connectivity. Payments growth has happened despite systemic issues that face the African continent. So I'm giving you a very different narrative to rethink how you think about your businesses and your impact on this continent. Sorry, guys, a little bit off. Okay. So let's fast forward a little bit to understand the opportunity that we have. I should check on time. Thank you. So Africa's got 1.2 billion people. In about 25 years, that will be 2.5 billion people, as the smart number people tell us. What does that mean? It sounds like a great number. Yes, we'll have the highest population in the world. Great number. That means half the world's population growth occurs on this continent. Digest that for a moment, right? Now, these are things the economists tell us. GDP is going to grow. Great stuff. Africa is forecast to grow at 3 to 4%. You've got some leading markets like Niger, Rwanda, that's doing a bit better than the rest of us. But guess what? The economy is going to grow. You should be excited. Unemployment from a continental perspective looks great. 7% is such an amazing number to talk about. Yet in South Africa, we sit with 30% among what's called official unemployment. You asked me for my controversial opinion. Youth unemployment is about 70% in this country. So why are these data points important, right? So overlay these data points with the challenges that this continent faces. Food crisis, energy crisis, impact of climate change, impact of colonization. Those are the real things that are still in countries that claim to be democratic entities. Now, this goes a bit deeper, and this is where I kind of touch on your soft side. Most of you all woke up in hotel rooms this morning. You had a good night's sleep, you had breakfast, a cup of coffee. Most of you are reasonably well off. We've got food to eat, we've got electrified homes, we've got clean running water, we've got flush toilets. Yet there are millions on this continent that still live in dire poverty today. Right? We are the privileged. This is not about race. This is really about we are the privileged because we have access to the damn basic necessities. Millions on this continent don't have flush toilets, don't have access to clean running water, don't even have access to the internet, let alone where the hell does digital payments features on their agenda? Not important. So understand that stark contrast. But then overlay this with the opportunities that exist on this continent. We have a demographic dividend. That simply means we have a youthful population on this continent, and it's going to continue to grow in that context. Urbanization is happening. GDP tells us that. If rural Africa is going, if you're going to see growth, naturally there's levels of urbanization taking place. Technology advancement, yes, depends how you interpret that. And yes, we have a wealth of natural resources. So my question to you today is, we're in a continent that's going to grow. So you have two choices. You have choice number one. I'm happy to grow at the rate that the GDP grows. It's a choice. Because the GDP is going to grow, the economy is going to grow. Or do you want to be a catalyst for greater growth? So what does that mean? How am I thinking about this in the things that I do? South Africa is one of the more mature payments and banking markets in the world, globally, right? We've got great infrastructure, we've got sophisticated banking practices, we've got a great national payment system. It works, it's reliable, it's trusted. I, as a fintech entity, wants to lead the growth in fintech. And my goal is to innovate fintech solutions. But that all sounds great. So how am I doing that, and how am I taking that seriously? In this country, at the bottom of the continent, I've put up my hand and said, SARB announced a few weeks ago the 2-year roadmap in 2024 that really is an extension of Vision 2025. And the 2-year roadmap is really about, let us drive things like immediate payments, digital transformation, access to internet, access to infrastructure, impact underutilized markets like agriculture and transport. And I've put up my hand and I said, I support the vision of the SARB. Great, because we all do that as well, right? We all do that. We all say, great storyline. We're there behind you. But I not only express my support for this 2-year roadmap, I am going further and saying, I want to be an enabler to help deliver the strategic objectives of the Reserve Bank in this country. Leverage influence, role, leverage organizational clout, and use that to drive economic change in this country. So back to our storyline, seeing that I'm going to run out of time just now and I'm going to get kicked out of the stage. Again, reminder, population is important. 1.4 billion, 1.2 billion. India, latest numbers, 85 billion UPI transactions. Africa, you add up the large numbers, roughly about 40 billion. Even if you push that up to 50 or 60, still a terrible number. Okay? So what has allowed India to reach those volumes of immediate payments? They've addressed issues of internet penetration. They've addressed issues around government policy. They've addressed smartphone accessibility. And they've addressed the problem of price. If I stand here today and you all exist today because you have businesses, you want to generate a revenue, you want to make a profit. And I'm going to stand here and tell you, my goal is to drive the cost down to zero. So what does that mean? Does that mean we become irrelevant and non-existent? Absolutely not. We find creative ways on how we manage cost and revenue through payment value chains. But a consumer, the goal for the consumer should be the cost to zero. Right. Let's see if I get this right. Okay. So, I'm getting closer, Shlop, before you kick me off the stage. So let's understand Africa just a little bit more, because we fail to understand that they are enabling entities and we don't leverage these enabling entities well enough. On the continent, we've got the African Union, which unifies virtually every country on the continent. You got the Continental Free Trade Area and the Free Trade Act, which is supposed to foster easy cross-border trading. We've got a Pan-African payment system. Yeah, we actually have a Pan-African payment system. And we've got entities like the African Development Bank that looks at the interests of development on the continent. So my plea to you as a fintech body, and I implore you today, you have two choices. Go with the flow. Or rather, be deliberate about how we purposefully drive change. And what does that mean? I am asking you to join me in lobbying for support for Africa. Yes, I am South African, but I am saying join me in lobbying for support for Africa, because this vision is so great and the opportunity is so massive. And if we do nothing about it, yes, we'll all benefit, but we could benefit even more. And the people of this country and continent can benefit even more. So let's address the issues around policy, funding, infrastructure spend. I don't want to be complacent with what the economists say GDP growth is going to be. I'm saying let's push those boundaries, because evidence tells us immediate payments contributes to GDP growth. So let us push those boundaries. And what will that unlock for us as a continent? It will unlock GDP, it will unlock profit, it will unlock the unbanked, and it will unlock financial inclusion, it will unlock economic growth. So for those of you who came here today and said, yay, first speaker, we're going to hear cool stuff about CDBC and, cryptocurrency, I can talk about all of that as well. That's why I said I'll be able to talk for more than a day, but I am sorry to burst your bubble. And my final slide, just so that we think about this, sorry, just want to get the animation right. Let's rather focus on purposeful digital payments. And when I talk about purposeful digital payments, I implore you to connect the economic impact of what you do every day. Because when you start to connect the economic impact, we start to understand the real impact that we can have on growth and on people living in our countries. By purposeful digital payments, we'll naturally contribute to increase in mobile money accounts, bank accounts, wallets. But that doesn't stop there. Financial inclusion then happens. But what does that mean? Base layers need to be laid. So financial inclusion happens because things like financial services products, funeral, life, non-life, savings, all now can play digitally in this ecosystem. That unlocks greater potential because that now leads to education, because underpinning all of this are things like infrastructure, telecoms, education, healthcare, entrepreneurial activities. So my plea to you today is purposeful digital payments will allow us to be a catalyst to drive out cost reduction, growth of SMEs. Did you all think about the fact that you will help to contribute to tax revenue in your countries? And did you think about the fact that you will help to reduce social grant dependencies in your countries? Because if we take people out of poverty, they are less dependent on the state. So ultimately, the impact is reduce poverty. So my narrative for you is, let's be serious about making the lives of other people better. Thank you, everyone, and it's been a privilege speaking to you. My contact details are there, and seriously, I can talk to you about anything about payments. Thank you.